Hello everyone, this is Jim from Lotto Finance. Welcome back to our channel. We are with you on 23rd of August. Alright, on this video we will just talk about commodities. They are just rising and some of them are rising so fast and some of them are just declining so fast. Let's start with our first chart. And as you can see, we are on the natural gas chart and it's rising because, the natural gas is just like a rise in September and October. Generally, there's a rally on that time just before the winter because the countries are just spending so much natural gas for heating season in winter time. So just imagine like the country, like it just daily, let's say like a 1 million cubic meter, like a daily in the summertime, and the capacity on their transport and other things is like a 1 million, so like it's the balance. But in wintertime they just generally spend around like a 2 million, so that makes they need extra gas. So they just solve this problem by just storing the gas and then using that gas in wintertime in the coldest day. So some of like from the pipeline and then some of the storage, so balancing the grid. That is happening in the world right now. So in Germany and some other European countries, the problem is if the flow doesn't happen, they have to fill up completely the storage. So not enough the storage and also not enough gas to store like complete to fill up the storage. That's why the gas prices are skyrocketing in the European region. So they are just requesting natural gas from US. And in US, there is Freeport LNG terminal, and because of the overload, it just like it had some technical problems and then just explosions, and they are just restoring that capacity in that one. And as long as we see that capacity repaid soon, then we will just see higher price of natural gas. Why? The reason is basic. There will be a lot of flow to Europe by LNG format, and then at the same time in winter time US consumers also like will require a lot of natural gas, so demand will be higher. When demand is higher, then the price goes higher. That's the basic demand and supply cycle. So as we get closer to that winter time, that September and October rally, as you can see here, it is testing $10 level so much. It has tested on 22nd yesterday, and then just some sell-off, some correction, but this level is critical. Like nobody is just like evaluating this level, like a $10 level so much, but it's the reality right now. And everybody was expecting to go decline on $8 and $9, but right now we are talking about $10. Reason is gas flow to Europe will stop completely for the 3 days at the end of this August, because Russia just told that they will just repair another repayment in Nord Stream 1 pipeline. That is really catastrophic for European gas buyer. All right, let's look at our second chart.
You are ready to win with us. GAN Markets.
All right, our second chart is US oil. As you can see, the WTI US oil is rising. Reason is basic. Yesterday evening after OPEC meeting, Saudi energy minister just told that the paper markets, they just like tell the financial markets and real market is different. So if we just see sharp declines in prices, so we have to take action against that one. And then we have spoken this with our allies in OPEC plus. So that means they won't let the prices go down fast in that one. So what happens? So they just agree on that each month $5, $6 decline in a basic thing, so that like the governments and countries producing oil will just balance their balance sheet, and then it will just go on like that, and then it will stop around like a $75. It will just be like that. So they are okay with that kind of decline. But if they just released, they just like seen have seen some sharp decline in July, at the end of June, and then beginning like a full month July, from $100 to $84. So they have seen $16 decline in just 1 month. And they have seen that if this trend goes down, if this trend goes on that direction, each month $10 decline will just make, at the end of this year, will be $40-50 and oil price, and they don't want that. They want a stable price around like 60, as I said, $60-70 between that range, and stable on that price. They may be right, but even this price like a $60-70 is expensive for some countries, so they are just finding alternative ways like cheap Russian oil. So US is telling that don't buy Russian oil, but the countries are saying that, all right, if we don't buy that one, Russia is offering us $30 discount. Then what are you offering? And as US, not only it's to free market, so I cannot offer you like a special discount because like I'm not market maker. And then they say, all right, then you don't have any choice. Just like India is doing this move right now, and recently Turkey as well, like it's just becoming the next India, because they are doubling down, they are doubling up their imports from Russia, oil imports from Russia. That means the market will just balance itself like that. Some will just buy cheap Russian oil, some will just buy expensive oil, and then at the end of the day they will say, no, we're not buying expensive one, we will be the one buying that one. Then OPEC Plus members will just realize that they need to get a balance. That's why we may see some rise as well, but then at the end of the day these prices has to go down, otherwise a financial crisis will just happen, which is expected heavily, and then it will just decline so much faster than OPEC didn't want. All right, let's look at our last chart. All right, our last chart is gold. As you can see here, gold prices are on sharp decline. It's just like on a big decline. Reason is interest rates. Every government around the world is just rising the interest rates, and then bonds are just becoming more valuable against gold and precious metals. So these trends will probably go higher because interest rates hikes will be much more in this last quarter of this year, and September especially, and Fed is expected 0.75% interest rate hike. If that happens, then we will be talking about range of 3% interest rates in US. So the bonds will be more rewarding and more tempting for these investors. That's why people are selling these precious metals, and then they are buying government bonds. That's why we see decline. And I'm repeating again, if we don't see any China and Taiwan issue, if we don't see any war risk other than Russia and Ukraine, even if we just see some solutions on Russia and Ukraine side, we will definitely see $1,500 level in gold with this high interest rate environment. That's my prediction. And as I said, the risks are keeping the price of oil and gold fluctuating and volatility. Oil is rising because of the risk, and gold is declining and then just keeping some high or because of that risk. When we see these risks down, we will see sharp declines on both commodities. Thank you so much for watching us. We will be together on more news, and then we will cover more charts with you. Have a nice and profitable day. Bye.